Hello, and welcome to part two of credit, banking, and financial traps. Today, we're going to talk about understanding credit and how it quietly shapes your future. The credit basics, your score, and building and rebuilding. So, in part one of this module, you learned what debit is and you learned what credit is. Remember, debit is your money and credit is borrowed money. So, now we're going to go a little bit deeper because credit quietly shapes a lot of your future. The good news is credit can be built from nothing and it can be rebuilt after a rough pass. You are not stuck. Where you start does not determine where you end up. I'm not sure how many of you have seen Medea, Tyler Perry's a character. It's like a TV show. They did have some plays. Her name is Medea, and she says, "It's not about where you come from, baby. It's about where you're going." That is exactly how credit is. And in this module, I'm going to help you understand it, use it wisely, and then in part three, we're going to talk about how to avoid the traps covered in credit. First off, what is credit anyways? Credit is basically borrowing money now and paying it back later, usually with a little interest. And your credit history is your track record, and lenders use it to decide whether to trust you and on what terms. So when you borrow it now and you use your credit, you can receive money, goods, or services today with promises to repay it later. And that promise is the foundation of every credit relationship. So the lender trust is a strong history, means like lenders can trust you with lower rates and better terms. A thinner damage history might mean higher interest rates or a closed door. Really just depends on the situation. Now, your track record, your credit history tells lenders every time you've borrowed and whether you paid it back on time. It's the evidence that they look at before saying yes or no. Interest is the price. Credit is not free. The cost of borrowing is called interest. Understanding it is the first step to making credit work for you and not against you. Credit matters more than you think. It can have an impact in the real world. It really affects a lot of different things. Landlords check your credit before renting to you. Utilities might require a deposit. Insurers use it to set rates. If you have car insurance or health insurance, some employers review it too. Good credit is not a status symbol, but it does save you real money and it opens up a lot of doors. Credit affects your approval whenever you're renting things. If you get a car loan, your score determines the interest rate that you're going to pay over the life of the loan. And poor credit can mean larger deposits just to turn on your lights or utility. Also, it really can affect how much interest you pay over time, though. The higher score means the lower interest paid over time. So you really want to have a high credit score. And we'll talk about those here in a minute. So over to the right, you will see numbers of credit scores. They go anywhere from 300 to 850. And that sums up your entire credit history at a glance. Again, the higher your credit score is, the better. And it's not a judgment of your worth, it's just a snapshot of your borrowing history. So if you have a 300 to 579 credit score, that is very poor. You're going to have very limited access, high deposit requirements, interest rates out the yin. It's going to be intense. If your credit score is 580 to 669, that's fair. Some approvals, but higher interest rates. And if your credit is anywhere from 670 to 739, that's good. And most lenders will work with you. Now, excellent is that 740 to 850 range. This is very good, like wonderful, exceptional, best rates and terms available. You are going to get low interest rates. So what even makes your score? Like what goes into your credit score and what moves it? Payment history. That is the single biggest factor. Late payments hurt the most. You need to pay your credit cards on time every time. Credit utilization, how much of your available credit you use. Lower is better, so aim well under a third of your limit. And then the length, mix, and new credit. That really, like, how long have you had credit? The variety of account types you have, and whether you open many new accounts at once affects your credit score as well. Okay, so the theme here, in order to shape a good credit score, is to borrow a little, pay it back on time every time. And if you are building credit from nothing, then this is a great guide for you. You're going to put down a deposit that becomes your limit, then use it lightly and pay it off in full every month. It's a simple, reliable starting point. Okay, you can also get a credit builder loan, which is a small loan from a credit union designed for exactly this purpose. And you make payments, they report them, and your history grows. You can also become an authorized user on the account of someone you trust who pays on time, and their good habits can help your history. A great example of this is if you have an 18 or 19-year-old kid and, they don't really have credit and they're trying to build it from nothing. You could finance a car for them and allow them to co-sign on it, or have them co-sign on something. Or maybe if you have no credit, you can co-sign with someone on something to build your credit. All of these work the same way. They give you a chance to show you pay on time. And that proof is all you need to get started. Smart usage is very, very important when you have a credit card. A credit card is a tool. It's not free money. Every dollar charged is borrowed and it must be paid back. So if you use it right, it's going to build your credit for free. Here are 3 tips that can help you use it properly and build your credit score. First and foremost, only charge what you can already pay for with cash. I'm going to say that one more time. Only charge what you can already pay for with cash. This one rule prevents most credit card debt before it even starts. Secondly, pay the full balance on time each month. You build credit and pay 0 interest, and that is the sweet spot. And lastly, keep your balance low compared to your limit. Low utilization signals responsibility and it lifts your score. Let's say you don't pay off your credit card though. Let's say you charge a little bit more that you don't have cash for it. The cost of carrying a balance is, when you don't pay off the full amount, the leftovers get charged interest, often a lot of interest. So paying only the minimum can stretch a small purchase into years and literally double the cost. So paying the minimum on a $500 balance at a 24% APR can take years to pay off and cost hundreds more in interest alone. So the pattern that you want to avoid is don't charge more than you can pay off, okay? Because if you do, that balance carries forward with interest added on top. If you only pay the minimum, the debt lingers for years and the total cost quietly doubles. And then if you are using it irresponsibly, this credit that was a tool now becomes a trap. And we're going to talk more about that trap in every single detail more in part 3. But just be mindful of the cost of carrying a balance with the credit card. There are free resources that you can use to check your credit and check it for free. You are entitled to your credit reports for free at annualcreditreport.com. That's the only official site that's authorized by federal law. And I encourage you to do that. Look for mistakes, accounts that aren't yours, wrong, late marks, errors, all of the things. And fixing errors is free. You can dispute and correct mistakes. That costs nothing. And fixing one can meaningfully raise your score. It really doesn't cost anything to look, though. Checking your own report doesn't hurt your score. There's no reason to wait. Just go take a look at it today and explore what your credit score is. If you do have a really low credit score because of past mistakes, just remember that you can recover. You can rebuild after a rough past because mistakes aren't permanent. Credit heals with time and steady habits. You don't need a perfect past. You just need to be more consistent in the present. So start small. A secured card or credit builder loan gives you something to work with right now. Make sure that you pay it on time. Every single payment has to be on time because that's a positive mark, and that begins to outweigh the old ones. And then lastly, let time work. Keep the balances low, let the months add up. Credit scores respond to consistency. Now it's time to reflect and act. Remember, credit is just trust measured over time, and trust can always be rebuilt one payment at a time. Okay? This week's action, I want you to pull your free credit report at annualcreditreport.com and read over it. Look for errors, know where you stand. What is your credit score? How did it get there? But if you don't have any credit or a good credit score, I want you to look into one way to start building credit: a secured card, a credit builder loan, or asking a trusted person about becoming an authorized user. The goal here, though, is to take everything one payment at a time. Every on time payment is a step forward towards a better score, lower costs, and a lighter life. So just keep going. This is you opening doors for your future self.